Have you already made one of these massive, costly mistakes while setting up your business with Doola? I'm talking about issues that cause major delays, trigger IRS red flags, or just cost you hundreds in unexpected fees. Look, I've been through the whole company formation and compliance process myself. I used Doola because I wanted it to be simple, but what I quickly learned is that the platform is only as good as the information you put into it. The system is efficient, but one small error can turn that efficiency into a huge headache. So, based on my first-person experience, let's get straight to the top mistakes you absolutely need to avoid. Stop sign mistake 1. Incorrect/inconsistent application data. This is the big one, and it mostly happens on the initial setup. I saw people rushing through the application forms and putting in tiny, non-matching details. For example, your name, address, or date of birth must exactly match your supporting documents, especially on forms like the W-7 for an ITIN or the SS-4 for an EIN. If your passport says Junior, and your form doesn't, or if you use a different mailing address than what's on file, the IRS will reject it. This isn't Doola's fault. It's a documentation mismatch. The result? Weeks of delay, and you have to start the application process all over again. The fix? Double-check every single field. I actually printed out my primary ID and read the application form side by side, verifying the spelling of my name and my birth date. Don't rely on autofill. Stop sign mistake 2. Mixing business and personal finances. The moment your LLC is formed, you need to treat it like a separate entity. This isn't just about good practice. It's a legal requirement to maintain your limited liability protection. I've seen entrepreneurs immediately use their new business bank account for personal expenses or pay for business services from their old personal account. When tax time comes, this commingling makes bookkeeping a nightmare, and worse, it can pierce the corporate veil, meaning a creditor could come after your personal assets. The fix? Open a dedicated business bank account immediately and get a dedicated business card. Every single dollar for the business must flow through these accounts. Use Doola's bookkeeping feature to keep a clean record, or be religious about doing it yourself. Stop sign mistake 3. Ignoring annual compliance deadlines. Doola is great for the setup, but many people forget about the mandatory ongoing compliance. Depending on your state of formation, like Delaware or Wyoming, and your tax classification, you have annual report deadlines and state fees that must be paid. If you miss these, your business status can move from good standing to delinquent, which can freeze your ability to operate, file taxes, or even access bank accounts. I've seen people assume Doola's fee covers everything forever. It doesn't. You have active duties. The fix? As soon as you finish your formation, check your state's annual compliance deadlines and set multiple external reminders for yourself. Doola will notify you, but don't solely rely on that email. It's too important to miss. The penalties for late filing are often non-negotiable and substantial. Stop sign mistake 4. Not understanding your tax status. This is a critical, yet common, mistake for international founders. A single-member LLC, by default, is taxed as a disregarded entity. But for non-US residents, this means different things for FBAR and other filings. The worst thing you can do is assume your tax filing is simple without consulting a professional, especially with the Doola tax service. People jump in thinking their situation is straightforward, only to find they've misclassified their entity or failed to account for foreign tax credits. The fix? If your business is earning money, get a consultation with one of Doola's CPAs or an external international tax professional. Don't wait until April 14th. Understand the difference between FinCEN 114 and Form 5472/1120. A proper consultation will save you time and massive penalty fees in the long run. These are the 4 areas where I've personally seen and experienced the most pain points. The Doola platform is a powerful tool for getting your US business started, but it still requires your diligent attention to detail, especially regarding documentation, finances, deadlines, and taxes. With that said, thanks for watching, and until next time.